Michelle Lafreniere, Director of Tax at Profi 2020 Dental CPAs. As a tax professional with many years of experience, today's topic is something that can be very complex: vehicle acquisition in a business. Let's break down the key considerations, common pitfalls, and best practices for managing vehicles in your business. Let's get started. Let's first talk about audit risks and proper classification of business vehicles. First, I want to caution anyone considering buying a vehicle in your business. Vehicles are one of the top reasons businesses are flagged for IRS audits. Missteps in how vehicles are purchased, used, and documented can expose businesses to significant compliance risks. To avoid these pitfalls, it's essential to treat business vehicles as true business assets and follow strict guidelines for their usage and financial management. Here are the 3 essential things that must be done correctly. Let's first discuss title and registration. The vehicle must be titled under the business name, not the personal name of the owner. Secondly, the business debt. Any loans or financing associated with the vehicle should also be in the name of the business. And lastly, insurance. The vehicle must be insured under the business's name, not with your personal auto insurance carrier. Many business owners mistakenly purchase vehicles in their personal names but attempt to treat them as business assets. This will not hold up under scrutiny during an audit. If a vehicle is to be considered a business asset, it must be handled as such in all aspects from titling, financing, to insurance. One of the common areas of confusion is the distinction between business and personal use of vehicles. The following guidelines clarify the difference. Business use includes trips to the bank to deposit funds, driving to purchase supplies, traveling between office of multiple practice locations, or meeting with clients. Now let's talk personal use. This includes commuting to and from home, running errands on weekends, or any other non-business related activity. Your drive to work each day is a personal use of the vehicle. If the vehicle is primarily used for personal purposes, it should not be capitalized within your business. For vehicles that are capitalized for business assets, the following additional compliance requirements apply. You need to be tracking personal use. Any personal use of a business vehicle must be recorded and reported as additional income to the owner. This is done by calculating the ratio of personal to business mileage and reporting the personal portion as taxable income on your W-2. For example, if the practice owner takes the vehicle and uses it for family vacation, the vacation miles should be recorded and those miles will be considered additional income, much like a fringe benefit. Let's talk clear guidelines. A business vehicle should primarily remain at the office and only be used for business-related travel. Personal use, such as driving it to and from home, can invalidate its classification as a business vehicle. Let's talk through mileage tracking and reimbursement now. Accurate mileage tracking is crucial for compliance, whether the vehicle is a business asset or a personal vehicle used for business purposes. You must maintain mileage logs. These are detailed logs that document the purpose, date, and miles driven for each trip. For reimbursement, S-Corp owners, business mileage can be reimbursed through the W-2 payroll system. Each month, owners or employees should report their business mileage and receive reimbursement at the IRS standard rate. The benefits of mileage reimbursement include that you can expense the business mileage as a deductible expense for the company, while the reimbursement is received as non-taxable income. Mileage reimbursement is often preferred over capitalizing a vehicle because it avoids higher business insurance rate, simplifies compliance, and reduces audit risk. Now let's talk through depreciation and tax implications. When a vehicle is capitalized as a business asset, depreciation and eventual disposal of the vehicle come with significant tax considerations. There is depreciation recapture. Upon selling or trading in a business vehicle, any gain is subject to ordinary income tax. This is due to depreciation being recaptured, which effectively claws back previous tax benefits. For example, a vehicle purchased for $80,000 fully depreciated to a zero tax basis is traded for $50,000. The $50,000 trade-in value becomes taxable income for the business at ordinary income tax rates. These rates can be up to 37%. To minimize depreciation recapture, consider whether capitalizing the vehicle is necessary or if tracking mileage is a better option. We're now ready to review both options. Recommendations for vehicle management. Option 1, capitalize the vehicle in the business. As I previously mentioned, if a vehicle is capitalized as a business asset, you must make sure to title the vehicle under the business, finance the debt under the business, and insure the vehicle in the business's name. If you're going to do personal use of auto, it must be tracked and reported as taxable income. Be prepared to account for depreciation recapture when the vehicle is sold or traded. Option 2, use a personal vehicle for a business. For most business owners, this approach is most practical. You simply track business mileage and seek reimbursement through payroll. You avoid higher insurance premiums associated with business-owned vehicles. You simplify compliance and avoid depreciation recapture issues. This option creates a win-win scenario as business mileage is deductible to the company and reimbursement is non-taxable to the owner. Let's talk about common mistakes to avoid. Mixing titles, purchasing a vehicle in a personal name but claiming it as a business asset. Failing to track mileage. Even for business vehicles, personal use must be tracked and reported. Double dipping, attempting to deduct both actual expenses, gas, maintenance, and mileage. Tax rules require choosing one method, either actual expenses or mileage deductions, but not both. Vehicle acquisitions for business practices require careful planning and strict compliance to avoid audit risks and unexpected tax liabilities. Here are some key points to remember. Title, insurance, and debt for business vehicles must align with the business entity. Personal use of a business vehicle must be tracked and reported as taxable income. Mileage reimbursement is often the preferred method for simplicity, tax savings, and reduced administrative burden. Depreciation recapture can create significant tax liabilities when disposing of business vehicles. Whether you choose to capitalize a vehicle or opt for mileage reimbursement, a strategic, organized approach will help you stay compliant and maximize tax efficiency. At Profi, we're here to guide you through these complexities and provide tailored advice to support your success and help business owners make informed financial decisions while staying compliant with tax laws. For personalized guidance, don't hesitate to consult with a trusted tax professional. Together, we can navigate these challenges and keep your business on the road to success.